A landmark agreement has been signed that will see Canada supplying 2 million tons of BC LNG to European markets, including Germany, the UK, Sweden, and the Netherlands.
This is an important moment for the Nisga'a Nation, whose vision and leadership help make this a reality, for workers and communities across British Columbia, for Canada's partnerships with allies seeking secure and reliable sources of energy, and for our country's ambition as a global energy superpower.
The deal was secured during a signing ceremony in Germany as Canada looks to drive economic growth and expand trade partners away from reliance on the United States.
Canada just made a move that could change the global energy game. A major European country has chosen Canadian gas for the long run, giving Canada a huge win while putting fresh pressure on the United States. This deal could weaken America's grip on the energy market, and that's only the beginning. Germany's largest gas importer signed a binding 20-year agreement to buy liquefied natural gas from a project on British Columbia's northern coast. Uniper, the Düsseldorf-based energy giant, committed to purchasing 2 million tons of Canadian LNG per year for 2 decades from the $30 billion Ksi Lisims project. It is Canada's first major long-term LNG supply agreement with Germany. Europe is locking in Canadian gas through 2052. And for the United States, the world's largest LNG exporter, a new competitor just secured a 2-decade European customer. The deal was signed in the presence of Germany's Federal Minister for Economic Affairs and Energy, Katharina Reich, and the Canadian ambassador to Germany, Vera Alexander, a diplomatic staging that reflected the agreement's significance to both governments. Under the sale and purchase agreement, Uniper will purchase 2 million tons of LNG, approximately 30 terawatt-hours of energy per year, on a free onboard basis for up to 20 years, with first deliveries expected from 2032. It represents Canada's first binding LNG offtake agreement with Europe, a firmer commitment than the letter of intent the two parties signed the previous month. As a trusted partner, Canada helps diversify Europe's energy supply and strengthens resilience against future disruptions, said Uniper Chief Executive Michael Lewis. That statement captures the strategic logic driving the entire deal. Uniper is not merely a large German company. It is central to European energy security. The German government took Uniper over during the 2022 energy crisis following Russia's invasion of Ukraine, when the company faced collapse after Russia cut off the gas supplies it had depended on. Berlin is now in the process of privatizing it. A company that nearly failed because of overdependence on Russian gas is now locking in Canadian supply for 20 years, the clearest possible demonstration of Europe's determination never to be that dependent on a single hostile supplier again. And if you want the real story behind how Canada is still holding its ground through tariffs, wars, and hard times, hit join below to join the membership for exclusive documentaries you won't see anywhere else about Canada's progress and rise through uncertainty. The Ksi Lisims project itself is one of the most significant LNG developments in Canada. The name means from the Nass River in the Nisga'a language. The facility will be located on Nisga'a Nation-owned land on the northern tip of Pierce Island, near the Alaska border, approximately 80 kilometers north of Prince Rupert. It is designed to produce up to 12 million tons of LNG per year from 2 floating production and storage facilities. The federal government described it as Canada's second largest LNG facility, with the potential to represent 13% of Canada's total LNG export capacity. The $30 billion cost estimate makes it one of the largest single energy investments in the country. The ownership structure places Indigenous participation at the center of the project. Ksi Lisims is co-developed by the Nisga'a Nation, Houston-based Western LNG, and Rockies LNG, a consortium of Canadian natural gas producers. The Nisga'a Nation is a full development partner on whose lands the project sits, not merely a consulted community. Nisga'a Nation President Eva Clayton has been central to the project's public presentation, appearing at the British Columbia Environmental Assessment Certificate announcement in September 2025. The model Indigenous nations as equity owners and co-developers of major energy export infrastructure mirrors the structure of Cedar LNG, where the Haisla Nation holds a majority stake, and reflects the broader shift in how Canada's resource projects are being built. The emissions profile of Ksi Lisims is central to its commercial and political positioning. The project is designed to be powered by renewable hydroelectricity, making it one of the world's lowest emission intensity LNG facilities, with a stated pathway to net zero operations. Canada is naturally endowed with a world-class natural gas resource, which, through responsible development, is one of the lowest emissions production complexes in the world, said David Thames, head of Western LNG. The hydroelectric-powered liquefaction process distinguishes Canadian LNG from Gulf Coast American facilities, most of which use natural gas to power liquefaction, giving Canadian LNG a lower carbon footprint that European buyers with strict emission standards increasingly prioritize. The competitive dimension for the United States runs directly through this deal. The United States remains the world's largest LNG exporter, and American Gulf Coast terminals have supplied much of Europe's replacement gas since Russia's supply cuts. But the Uniper agreement demonstrates that European buyers are actively diversifying their North American supply across two countries rather than depending solely on American terminals. The gas from Ksi Lisims will likely serve customers in Germany, Sweden, the United Kingdom, and the Netherlands Uniper's core European markets. Every one of those 2 million ton annual deliveries is supply that European utilities are not contracting from American exporters. The geographic reality reinforces the competitive shift. While Ksi Lisims sits on Canada's Pacific coast, giving it privileged access to Asia, the largest LNG market, the Uniper deal, shows Canadian LNG can also reach Europe competitively. Uniper's senior managing director for North American gas trading, Mike Newman, noted that the ultimate destination of the volumes will depend on free market conditions and regulation, with the supply remaining flexible enough to bolster energy security across Europe as needed. That flexibility, the ability to direct cargoes to either Asian or European markets depending on price, is exactly the kind of supply optionality that strengthens Canada's position against American exporters locked into specific shipping routes. The Uniper agreement is not the only major offtake deal Ksi Lisims has secured. Total Energies, the French energy giant and the largest buyer of North American LNG, previously signed a deal to purchase 2 million tons per year for 20 years from the same project, while acquiring a 5% stake in Western LNG with an option to increase its position to approximately 10% once a final investment decision is made. Two of Europe's largest energy companies, Germany's Uniper and France's Total Energies, have now committed to long-term purchases from Ksi Lisims, representing 4 million tons of the project's 12 million ton annual capacity under contract before construction is complete. The project has not yet reached a final investment decision, the critical milestone at which the developers commit the full $30 billion in capital. The Prince Rupert gas transmission pipeline that would feed the plant is not included in the $30 billion figure and represents additional infrastructure that must be built. Ksi Lisims received its British Columbia Environmental Assessment Certificate in September 2025 and is advancing through remaining approvals. The Uniper and Total Energies offtake agreements strengthen the commercial case that supports reaching a positive final investment decision. Long-term contracted demand is exactly what lenders and investors require before committing construction capital. The project faces documented environmental opposition. Richard Brooks, climate finance director with Stand Earth, called the deal a major step backwards for climate action for both Germany and Canada.